let's be honest, the Fed's not raising, the Fed's not lowering. They haven't been making moves either way here for a bit. And so I honestly think a lot of people shouldn't really be focusing as much on the Fed as they are right now. My opinion is when it comes to these sorts of companies, I mean, you're just going to see more and more deals. I've been talking about this for years, honestly, on the channels, right? Is like, I expect more and more of these sorts of deals, whether it be with McDonald's or Starbucks or, convenience type stores of doing deals with Tesla to ultimately have Tesla superchargers there. Real estate's obviously very weak. Not a lot of people are moving right now. That's not good for Home Depot's business model. I mean, Home Depot is a company that really thrives on people moving, having to buy moving stuff. A lot of people buy a lot of moving stuff from Home Depot. Isn't Tesla in a lot of those index funds? Now it is. Yeah, nowadays Tesla is, and so they benefit from that as well. Howdy there, folks. I hope everybody's doing well, as always. Hello. Happy Monday. Welcome in, folks. Where I actually want to start talking in regards to today's video is, a good time period I like to look at, if you're going to pull up a stock chart and like, what's the stock really done over the past few years, is pull up all the way back to basically prior to Rona. I love to look at a lot of stocks prior to Rona because that was obviously the last time we had a normalized period really in the financial markets, right? Because obviously Rona screwed up everything. Then we had stimulus that screwed up everything, and it's just a messed up time period. So a good time period to look back on is prior to Rona. And so that's why I let stock like American Express. If I really want to know what it's done over the past few years, I want to look at where that stock was, basically prior to Rona happening, right? And it's interesting, since prior to Rona, which, we're getting close to 4 years now. Can you believe that? Getting close to 4 years. February 2020. That's crazy to think, like almost 4 years now. It's been since Rona. But, American Express only up 13% really since prior to Rona, which is very intriguing. Oh, somebody says Zion was the best. Yeah, Zion National Park is absolutely beautiful up there. Okay, guys, my potential buys list, before we start going through the markets and everything's going on here, my potential buys list is too damn long, like way too damn long at this point in time. I got to eliminate some stocks. I'm going to do it live with you guys right now. We're going to eliminate some stocks from here that I'm not likely buying those stocks, okay? So let's see. Rivian. Would I be buying Rivian? No, I'm not going to freaking buy Rivian. Texas Roadhouse. Probably not going to add any Texas Roadhouse short term. Too many other opportunities out there. I already have a decent little starter position in Texas Roadhouse, so I'm probably good on Texas Roadhouse right now. Hims, you never know. I'm going to keep an eye on Hims. I'll keep that one on the list. Probably won't buy it, but I'll keep it there. Cheesecake's always a potential. The Hood's a potential. SoFi's a potential. Pepsi, am I going to buy Pepsi? Hell no. Am I going to buy Coca-Cola? Hell no. I'll be honest with you guys. Callaway Topgolf, it's a potential. I'll keep that on the list. Google McDougal, am I likely to buy Google McDougal? Probably not. I already have a lot of exposure to a lot of big cap, mega cap techs, so I'm probably not buying Google McDougal, so let me kick Google off. Align Technology is a potential. Etsy is a potential. Amazon, am I going to buy more Amazon shares short term? Probably not. Too many other opportunities out there, and I already have a really nice size position in Amazon. Amazon, I believe, is the third biggest position in the public count. So I'll be honest with you guys, probably not buying Amazon right now. Avant's a potential. I buy some Avant here and there. PayPal, definitely. I'm adding at least for the next couple months here. Target's a potential. Wynn's a potential. Estee Lauder is a potential. RH a potential, but I really need it to go under 200. Mattel's a potential. Nike's a potential. Whirlpool's a potential. Dutch Bros, I'm keeping that on the list for now. I'm waiting for a big flush on Dutch. Like, come on, Dutch. Make a big flush. Foot Locker, potential. WBA, potential. And who knows, Bath & Body Works is a potential there. Let's see. Okay, so starting out here, safety stocks watch list here today. Dollar Tree's the big L of the day in regards to safety stocks, down 1.6%. Kraft Heinz is the biggest winner chicken dinner. Had a whole 1.1% gain here today. That's my potential buys list there. 6 stocks I'm hedged against. So Polaris is down. That's good for me. Apple's down. That's good for me. But SDow's down. That's not good for me. Toll Brothers down. That's good for me. Chipotle's up. That's not good for me. Tesla's up, but we know that's pretty good news for me overall in regards to that. AI stocks, looks like AMD is the worst stock of the bunch here today, down about 1.7%. Adobe's down, Trade Desk is down again. TTDs, I might, damn. I'm going to add TTD to my potential buys list. I know I literally just freaking got that list down, but I do have to add TTD there. It's a potential. Am I going to add it this year? Probably not. Could I add it next year? Maybe. So I'll add them to my potential buys list. Where are we at here? AI stocks. Google McDougal's about break even today. Palantir's about break even. Palantir had a phenomenal day on Friday. My gosh. I mean, I think it was. I think we were up like $7,777 in the public count on Palantir on Friday. So Palantir had a really good day. Meta's green today, about 0.5%. So between Meta and Tesla being green, it should be a very good day for the public count here today. We'll see in a little bit here, but I'm thinking it's a good day. Oracle's up a decent amount here today. Nvidia's getting close to touching 500. 500. Wait till people are paying $600 and $1,000 for Nvidia. That's going to be fun. If we look at banking stocks watch list, JP Morgan is the only L of the day. This is rare. You don't usually see JP Morgan the worst performer of banking. It's almost always the best performer, if anything, and almost never the worst performer. I mean, I think this might be the first time I've ever looked at the banking stock watch list on Twitch, and JP Morgan was the worst stock of the bunch. SoFi is a big winner chicken dinner here today, up about a little less than 2%. SoFi. Big tech here today. I'm wondering, did Tesla get upgraded? What happened with Tesla? I haven't got a chance to see yet. Tesla must have got upgraded or something, because Tesla's up big today and way outperforming the indexes, way outperforming their peers. EG Group Inc.'s deal to use Tesla ultra-fast chargers across Europe. Interesting. Convenience retailer EG Group announced Monday it has agreed in a deal to acquire Tesla's latest ultra-fast charging units for its company's first growing EV point business across the UK and Europe. The UK-based company said that the chargers will be branded EV Point and will leverage Tesla's industry-leading technology. The hardware will operate on an open network basis, meaning that drivers will be able to access EV Point chargers regardless of the brand of vehicle they drive. Chargers will also support the plug-in charge protocol, which simplifies and automates payments. Okay, interesting. The EG Group has 671 sites in the United Kingdom and Ireland, 3,297 across continental Europe, wow, and 1,695 sites in the United States, right? And, my opinion is, when it comes to these sorts of companies, I mean, just going to see more and more deals. I've been talking about this for years, honestly, on the channels, right? Is like, I expect more and more of these sorts of deals, whether it be with McDonald's or Starbucks or, convenience type stores, of doing deals with Tesla to ultimately have Tesla superchargers there, right? I think it's just going to be a bigger and bigger thing we're going to see play out over the next many, many years. So I don't know if that's why Tesla was up big today, but maybe it is. I'm not really seeing any other news on Seeking Alpha other than that deal there. So I'm guessing that's why the stock's up 4% plus here today. But let me know if you guys see anything else. Yeah, Tesla's the best stock of big tech here today. Shopify's second best stock. Oobity Booba, Nvidia, Oracle, Palo Alto Networks, Intuit, Salesforce, and Meta are all green here today. Google, McDougal, the Qs are slightly red. Netflix, Amazon, slightly red. Snowflake, Microsoft, PayPal, MU, Apple, IBM, Adobe are all red, but it's very slightly red, all less than 1%. And once again, Intel and AMD are the worst stocks of the bunch here today. If we look at my Kathy Wood watch list here today, a bit of a mixed bag there. It looks like Unity's having a good day. I believe did they already report, or they report in this coming week? Let's take a peek at. See here. Oh, they must have already reported Unity. This week's huge retail, by the way, if you guys were not aware. You got Home Depot reporting this week, Target reporting this week, Advanced Auto Parts, TJX is reporting this week, Walmart's reporting this week, Macy's reporting this week, Williams-Sonoma reporting this week, Ross, Gap reporting this week. Big retail week here for the market, folks. Huge retail week for the market. Disney is second best stock in the Dow 30 here today. Nike's second worst stock of the bunch, and Intel's the third worst stock. Home Depot, a little weakness going into Home Depot into their earnings tomorrow. Probably a little scared investors there. And the thing that's really hurting business model of Home Depot right now, folks, is for Home Depot, real estate's obviously very weak. Not a lot of people are moving right now. That's not good for Home Depot's business model. I mean, Home Depot is a company that really thrives on people moving, having to buy moving stuff. A lot of people buy a lot of moving stuff from Home Depot. But then on top of that, they have to fix stuff, right? You go to sell a home, usually the buyer wants you to fix this and fix that. And so you got to spend a bunch of money at a place like Home Depot, and sometimes on very simple things, sometimes on more complicated things. When people buy new homes, sometimes they want to, redo this, redo that. And so more movement in the housing market is usually a very good thing for Home Depot. And so right now, that's something that's definitely going to weigh on the business model in the short term here. And probably not going to stop weighing on it for at least the next few quarters, right? In terms of my e-com watch list, eBay is the worst stock of the bunch, down 3% here today. Chewy's down 2.6%. Best stock is Affirm on my e-com watch list. That one's up 2% here today. Let's see, like Ford's down today. So not sure if they're doing very well. GM's up 0.3%. Okay, I don't know what that person was talking about where auto stocks are doing well today, because it surely doesn't look like auto stocks are doing well today. If I pull up Ford and they're down, and then GM and they're slightly up, Tesla's playing its own race today. Let's just call it that. India is considering removing import tax on imported EVs for 5 years. That's intriguing. Very intriguing. Okay. Somebody asked, what did I think about Vizio and CrowdStrike? Don't have a strong opinion on, companies there. Somebody asked about Apple hedges. Depends. I mean, you would have thought this would have been a great year to be hedged against Apple, and it's just turned out not to be, right? Even with their revenues being down, it's a tough stock. It's a really tough stock to go against, because a lot of people just end up wanting to blindly own it. And then the other thing with Apple is they obviously benefit in a massive way from just people buying in index funds on a week in, week out basis. I mean, imagine how many millions, tens of millions of people have 401ks or just different things that each and every week, or, several times a month at least, a certain portion of their check is going into index funds. And I mean, you compound that times so many people, and just a lot of people end up buying, stocks like Apple consistently. So will you consider buy SoFi? I've been considering potentially buying SoFi, but I don't know. We'll see. There's just a lot of opportunities in this market. That's the problem, man. There's so many freaking opportunities. And these are difficult markets because of that. Just to be quite frank, these are really difficult markets because if you have so many different opportunities out there, it's like, where's the best opportunity, right? So you buy this, buy that. Hims to flip net profitable early 2024 as per last earnings call. Ooh, that would be good. That'd be very good. Very good. If that happens, folks, very, very good news. Isn't Tesla in a lot of those index funds? Now it is. Yeah, nowadays Tesla is, and so they benefit from that as well. They don't benefit obviously as much as somebody like an Apple might benefit, for instance, because Apple's weighting is just so much bigger. I mean, Apple's market cap size is probably about 6x Tesla, right? So, obviously companies like an Apple or Microsoft, for instance, are going to benefit substantially more than a company like Tesla, right? So just something to kind of keep in mind there. Yeah, there's still a huge obsession with the Fed, and I really don't think there should be an obsession with the Fed right now. There's certain time periods when the Fed is in full control of everything, it dictates everything, and right now is not one of those time periods. We're in a dead Fed time. Let's be honest, a Fed's not raising, a Fed's not lowering. They haven't been making moves either way here for a bit, and so I honestly think a lot of people shouldn't really be focusing as much on the Fed as they are right now. I think there will be a time period when the Fed can be back into, let's call it, view again, and where a lot of people should start talking about the Fed again. And that will be the moment when people start to consider maybe a weaker economy, whenever that is. And will the Fed lower at that point in time? Or if the inflation spiked up massively again or something like that. But right now, I feel like there shouldn't be as much talk about the Fed. I think it's kind of like a chill time for the Fed, and been a chill time for the Fed for a little bit here. So that's just kind of my opinion on that. Where was I at in the chart here? Where was I at? Would you consider hedging against legacy auto? I consider it in the past, but I don't really want to do it. Those stocks trade at like 3 and 4 forward PEs. I mean, what you have to hope for by hedging against stocks like Ford or GM or whatever, like you basically have to hope for bankruptcy. And I just don't want to have to make a hedge bet that those companies are going bankrupt, right? There's a difference between those companies struggle or they, just get in a worse and worse place over the next 5, 10, 15 years. Or maybe they go bankrupt, but it takes 10 years from now, right? So somebody says, Rumble's reporting after the bell. Any thoughts? No. Definitely no thoughts on that one, but they do report after the bell. We do have some earnings coming after the bell. Seeing how market's trading out here toward the end.
The trading day, plus Courtney Reagan on weakness in retail stocks, and we got a really busy stretch of earnings for that group coming up. Phil LeBeau looking ahead to Fisker's report. That's out in overtime today.
Fisker?
Today, very much wait and see.
Who the F is buying a Fisker? Come on, man. Fisker?
Doubt about that. Just kind of idling here, and it makes sense. It's
By the way, somebody asked what I use. Fidelity Investments. Been using them for about 15 years. They have, in my opinion, probably about the best customer service you'll ever find for a brokerage company out there.
Away from where we are. In a weird way, both bulls and bears, I know you've been having this debate all hour, could declare victory. If you're a bear and you say, look, we never really got out of the muck from last year, you could look at the average stock doing nothing and actually most of the economically sensitive areas of the market really not performing and sending a little bit of a tough macro message and say, see, we told you. The problem is, 7, 8 stocks got the S&P up 15% and only a quarter of the S&P is keeping pace with it. If you're bullish, you say, look, we're sort of sideways for 2 years. The economy's bigger.
Yep.
We don't have a recession yet. As long as we don't have a recession, we should be able to keep this up and maybe get a catch-up trade from the rest. So I'm on board with that being the way you set out the probabilities for 2024.
What breaks that, though?
Yeah.
We talked about that. It's like you're in your camp here, and no one's budging yet.
I don't know if it breaks it entirely, but you can go through these phases where all of a sudden it seems like, we got a second wind in the consumer because wage growth remains where it is. And if you start to get inflation surprising to the downside further, and it looks like we're getting closer to the 2% target, then the Fed itself has said we're going to get there in 20.
Yeah, I mean, I think in order to get a lot of these bears over to flip them over to the bullish side, a lot of these people that are kind of neutral on the market that are maybe, let's say, hiding out in treasuries and things like that. I mean, there's several ways you can get them over the bullish side. But I think one of many ways, is if we were actually finally break through to new all-time highs in the S&P 500, Dow, NASDAQ. If we were to do that in 2023 at some point, or excuse me, into 2024, so we're not doing it in 2023. If we were to do it at some point in 2024, I think that could be something that gets a lot of people off the sidelines, because right now the people still look and they're like, we're still far away from the all-time highs.
Really, though, big downside moves in retail here to start this week ahead of all the major retailers reporting their earnings. We've got CPI tomorrow, Black Friday next week. The XRT is underperforming the broader market, but really it's a number of individual names that are off very sharply that kind of got our attention today. Department stores continue to suffer. Nordstrom down 4% and hitting a 52-week low. Kohl's down 4%, Macy's off 3%. Bank of America credit card data did show clothing spending fell more than 9% in October from last year. That was more than double the drop from September.
That's why Revolve's down big today, which means I need to buy.
Sharply too. Big Lots, Burlington, they're down 4%, Five Below down more than 2%. And look at some of these specialty names, sort of across the board. Hanes brands off 7%. Under Armour, VF Corp, Bath and Body Works,
Hanes brands is down to 3.
Those are all lower by around 5% or so. So really sort of across the board here, just some negative sentiment on the consumer before we start to hear the details from some of these retailers and the anticipation for this all-important quarter that we're just starting into right now.
Yeah, ugly looking
wow.
All those stocks down a lot.
That's a retail wreck.
As we look ahead to some
it's a holy smokers, it ain't no jokers.
We're also looking ahead to Fisker. Those numbers are coming out in OT, Phil LeBeau.
Fisker.
And Scott,
Fisker?
we're expecting another quarterly loss from Fisker.
How are they not
Remember,
bankrupt?
We were supposed to get these reports, this report last week, and then at the last second, just a couple of hours before they were supposed to report them, Fisker came out and said, "Well, look, we're going to push it off until Monday."
Oh, they did a
change
chef.
in CFOs, and
That's a good sign of a company that could go bankrupt.
That spooked people. That's why the stock was under pressure Thursday and Friday.
That's what the chef did
Came
back in the
a little
day.
bit today.
And then they
Here's
went
what
bankrupt.
to expect when you look at the third quarter. It all comes down to the fact that, okay, yes, they're going to report probably a loss of 19, 20 cents a share. I don't think that's going to move the stock unless it's dramatically away from consensus. It's deliveries. Where do they come in at? Average sales price still north of 65,000. That's the expectation. And what do they say about full year deliveries? Remember, Scott, they have twice reduced full year production expectations down to a range now between 20 and 22,000 vehicles. Do they change it again? Or do they say, nope, this is what we expect to deliver for the year? If they keep that guidance, Scott, that might give a little bit of support to a stock that has really been beaten down in the last.
Fisker and Lucid, it seems like who's going to hit bankruptcy first? By the way, somebody said Fisker already went bankrupt once. It'd be their second time. What?
PI tomorrow causes a bigger bump in the Russell beaten down or the Qs.
Yeah. Presuming we get the rate response in line.
That's what I'm thinking,
Yeah.
sure. CPI comes in favorable, rates move lower.
Yeah.
Russell or Qs or both?
I mean, I would think Russell has more room. It's obviously wound pretty tight down here. There's a lot of revisionism going on, interestingly, on the small cap front. You look and say, oh, are they really as cheap as they look? If you actually take out the money-losing Russell 2000 stocks, I think B of A said today, it's merely at an average valuation.
Oh, that's interesting. Okay.
For this much. But I do think in general, CPI is what we have to work with in terms of a potential market mover. If it's not too far from expectations, I don't know if it really stays with us for very long as a catalyst. Inflation,
yeah, it needs to be
this year
either much
really
better
close
or
to
much worse than
consensus,
expected to
and
stay
it's
with
almost
us.
taken some of the drama out of it. So we'll see if bond yields are held up by any sort of trepidation about what we're going to get tomorrow or not.
How close are you watching the banks these days?
Yeah.
Okay, earnings. Walmart touching an all-time high. Tell me, is this not the perfect environment for Walmart? Inflation, this is like the last year and a half is the perfect scenario for Walmart. Super high inflation, consumers really watching their spending and those sorts of things. Benefits Walmart huge. All right, we're waiting on these earnings to come here. Fisker, freaking Fisker. We got to actually hear their earnings. They'll probably come out after the break here. Fisker, Rumble, and then a bunch of other weird companies. It's a weird earnings day here today. Very strange earnings day. Tomorrow, what's interesting is we'll talk about Home Depot earnings. We'll go in depth on Home Depot earnings tomorrow. Workhorse is still public? How did they not go freaking belly up already? Workhorse, oh Lord. Home Depot, we'll talk in depth about Home Depot in tomorrow's live stream. That should be a really interesting earnings to see what's going on out there. Wednesday is going to be pretty interesting live stream because we got Palo Alto and we got Cisco reporting after the bell, and then we'll get to talk about Target's earnings, which Target is a stock I've started buying recently. I think that's an important one. We'll also talk about TJX as well. XPeng. Thursday's live stream should be pretty interesting. Got a few companies reporting after the bell. Beazer Homes, Gap, and Ross should be interesting. Also Applied Materials, but then we'll be able to look at Walmart's report in depth there. So that one shall be interesting. Let me jump in the chat while I'm waiting for these joke of earnings to come out here in just a moment. Somebody's talking about PayPal versus Airbnb, saying that PayPal's better short term. They like Airbnb better long term. Interesting. Any thoughts on SNA? Nice moat, good and needed business with a chance for a new big EV market. SNA? 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 What are we talking about here? Oh, Snap-on, that company. Yeah, I don't have an opinion on them, but I have heard the company several times in the past. So, forward P, 14. Market cap about $14 billion on Snap. Interesting. Let's pull up their financials over time. What do they make? Like a bunch of accessories and different products for autos? Or what exactly do they do again? Because that I don't know. $3.6 billion in revenue they did in 2017, for almost $4.5 billion in 2022. Gross profit went from a little over $2 billion to $2.4 billion. Okay, it's decent. Operating income went from $881 million to $1.2 billion last year. So looks like on the financial front, decent. Net income went from $557 million to $911 million last year. Okay. Huh. Yeah, I don't really have a take there, but somebody says tools. Maybe. They don't do a summary on this. Snap-on manufactures and markets tools, equipment, diagnostics, and repair information and system solutions for professional users worldwide. It operates through commercial industry groups, Snap-on Tools, Repair Systems, Information Group, and Financial Services segment. Company provides hand tools, including wrenches, sockets, ratchet, blah, 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 blah. Okay, interesting. Oh, yeah, NVIDIA next year. New AI chip.
I think we're seeing NVIDIA shares getting a pop today after unveiling a new AI chip, the H200. It's an upgrade from the H100, more memory bandwidth to handle intensive generative AI work. The chips are going to be released in the second quarter of 2024. Shares
second quarter of 2024.
A 9-day win streak. Stacey Raskin of Bernstein joins us now to discuss. Stacey, NVIDIA is back at those levels where it was in September, or kind of close to it, getting up toward the 490s, but how much competition are they about to get from AMD, from Intel?
Oh, stop it, Intel. Stop it.
Of Ignite.
You say AMD, but don't say Intel and AI. Come on.
I mean, look, you talked before the break about seeing who's pulling ahead of the pack. Like, NVIDIA kind of is the pack. Like, let's be honest here.
Exactly.
Everybody else is trying to catch up to them. And this is one reason I think we're seeing these new product introductions. NVIDIA is actually accelerating their progression. They used to go every couple of years, 2 or 3 years, they'd have a new architecture out. They're moving to an annual cadence. They've got, revisions to the current architectures. You talked about the H200, which will launch, like you said, Q2 of next year. They'll have Blackwell, which is the next generation architecture, launches in the second half of next year. They're continually moving the goalposts, and everybody else is trying to catch up. And even if they catch up to where NVIDIA was, which I don't know that they are, NVIDIA is still moving ahead.
That's what I always talk about with these, what I call super innovator companies, is people try to catch up to where that company's at, but by the time they get to where that company's at, the other company moved 2, 3, 4 steps ahead. So it's like you're trying to catch up to where NVIDIA's at now. So let's say you do that over the next 2 years. Okay, you're at where NVIDIA's at now, but the problem is NVIDIA just keeps going. So it's like a constant game of catch up there, which is a very difficult game to play. It happens with Tesla as well.
It has been in a long time. And some of these other names, it's even, you could argue it's even cheaper than some of these other ones like AMD. And for a demand environment that's probably more certain, like AMD actually gave us some numbers already for what they expected for their AI sales next year. Maybe this puts it in some context. They said that their product next year is called the MI300. And they said they thought they would do, in excess of $2 billion in sales next year. I would say if NVIDIA does $50 billion in data center sales next year, that will be viewed as incredibly disappointing.
Wow.
Right?
Wow.
They're going to do more than that. AMD is going to do 2. I mean, it's single-digit percentage probably of what NVIDIA is likely to deliver. That's what I mean when I say they are the pack.
Okay, so if I dig
he's got a valid point
with you, Stacey.
His point is valid.
NVIDIA's up 230% plus since the start of this year. AMD sold off today, down 1.5%, presumably on this news. I mean, that stock's up a paltry 80% as well. I mean, at these levels, do you still invest in NVIDIA? Is it still compelling, or do you put your money to work in something like AMD or Intel or another chip name that you cover?
I'll be honest. So, like in NVIDIA, I do like, and again, you mentioned the stock's up, whatever it is, 2 or 3x. Earnings are probably up 4 or 5x, though. So again, the stock's actually gotten cheaper as it has gone up.
It's true as well.
Everybody with NVIDIA,
he's spitting facts. That's all I'm gonna say. He's spitting facts.
Big so quickly, you just worry about sustainability. You worry about an air pocket coming. And again, I get it. We've seen these air pockets with NVIDIA in the past around crypto and everything else, and I always say the chances of them hitting something like that at some point in the future, it's probably 100%. We've seen them before. We'll see them again. Now, that being said, I still think the AI opportunity is massive. I still think we're really early. I'm convinced in 5 years, in 10 years, we will be talking about numbers that are materially higher than what we are talking about today.
Wow.
So with NVIDIA, like as always, I think you need a strong stomach. That stock has its ups and its downs, but
that's true.
I still think we're really early. I think the opportunity is massive. I think they're in the driver's seat. I think you have to own it.
Okay. We got APEC this week. For better or worse, semiconductors have become the lightning rod of those geopolitical dynamics between the U.S. and China. You had the commentary from SMIC, China's largest chip maker.
China.
It's very important to the U.S. and China, and the U.S. is very clearly trying to constrain China in terms of what they can and cannot do in this industry. I mean,
that's true. That's true.
You know, I would say the sanctions that they've been put in on so far, they've been trying to constrain them as much as possible, right?
To go about the role of the hyperscalers, the biggest cloud players in this AI chip game, Amazon, Microsoft, Google. Yeah. They'd all like to pay less for AI infrastructure. Sure. Right now, NVIDIA is a big piece of this. How much of a risk is it that all of those each of those companies comes up with some effective semiconductor design that powers enough of their AI strategy that they don't have to buy it from outside, including NVIDIA, AMD, Intel, et cetera?
I don't think so. So it's not new, right? So Google has been deploying their own internal silicon. They call it a TPU, Tensor Processing Unit. They've been deploying them for 8 years. You're right. Every single hyperscaler is likely working on their own chips. Google's deployed in size for many, many years. It hasn't slowed anything down.
That's true.
They tend to use those chips for their own internal workloads, where the workloads are more static rather than dynamic, where you don't need the programmability and the flexibility. Like that's the trade-off. These chips are going to be more efficient because they're custom designed for specific workloads, but they lack flexibility. Like there's no free lunch. Anytime you need the flexibility where the workloads are dynamic, and in particular where you need the NVIDIA software ecosystem, I think you're going to go GPU. And this is why, for example, like with Google, like you can go on Google Cloud as an end customer and rent a TPU instance. Nobody really bothers, right? Because end customers, they use CUDA, they want to use the GPUs. And so I think it's a risk in the sense that it's going to happen. But it's already happening. And I think the market is so big that I think there's plenty to go around, like for everybody. Certainly that's been the case up until this point.
Yeah. Okay. Or plenty for NVIDIA, depending on how you look at it. Stacey Raskin, thank you. Speaking of which, we are expecting Microsoft to make some AI announcements during the Ignite Developer Conference in Seattle this week. I will be there speaking exclusively to Microsoft CEO Satya Nadella.
Ooh, perfect.
Wednesday,
oh, no, that
1
won't
p.m.
be on live.
On the Exchange.
Eastern.
Must watch TV.
I don't know what's going on with their earnings, but those babies have not come out, I don't think. And then what was the other stock people wanted? Rumble? Dumble? What is it? Rumble Dumble? Yeah, that stock's down 5%. Who knows if they're even around in a little bit. But anyways, I think that's pretty much going to wrap up today's live stream. It was a decent day in the market. Public count up $14,700, so decent. Friday was a really good day. Friday was, I think, 30,000 plus in the plus. We got, obviously, the next 3 days are big for this market. We got earnings bonanza when it comes to retail space. Home Depot, Target, Walmart, Alibaba, if you want to throw them in there, Ross, Gap, TJX. Those are going to be what actually everybody cares about, where the market actually cares about over this next 3 days. Today was just kind of a little, whatever day. The next 3 days are going to be big. And tomorrow's live stream, we'll go in depth on that Home Depot report. Plus, obviously, we'll cover everything that's going on in the market and all those sorts of things. But we'll go in depth and actually find out what's going on with Home Depot and their business model, their guidance, where that's at. I think that's going to be really dang intriguing. So, anyways, appreciate everybody joining me as always. Thank you so much for being here, folks. Hey, guys, much love as always. Thanks so much for being here, folks. See you tomorrow on the live stream. It'll be even a more interesting one. And then Wednesday and Thursday will be really interesting as well. So, much love and peace, guys.